there has been important progress toward the FOMC's objective of maximum employment. However, despite this improvement, too many Americans remain unemployed or underemployed, wage growth is still sluggish, and inflation remains well below our longer-run objective.
Federal Reserve Chair Janet Yellen in congressional testimony saying, yeah, there's been some economic improvement, but there's a whole lot of room for more improvement. And to help the economy grow, she says, not so fast on raising interest rates. Oh, for what it's worth, she also said this rising sentiment to audit the Fed, no thank you. Well, we'll see what happens with that. After all, Congress will have that authority if they move forward with some sort of legislation. But instead of auditing, let's assess the assessment of the Fed chair by calling on the CEO of Euro-Pacific Capital, Peter Schiff, who is Skyping into us from Connecticut. And we are rejoined by Ford O'Connell at Newsmax, Washington. So, Peter, your assessment of Janet Yellen's testimony saying, we're not going to raise rates right now.
Well, I think she's speaking like somebody who has no intention of raising rates, but doesn't want to actually come out and say that. But you'll notice that all Janet Yellen said was that at some point in the future, the Fed is going to begin to consider raising rates, which means they're not even considering it now. And you might think, well, what else are they doing when they have their meetings if they're not considering rate hikes? I mean, after all, what is a central bank supposed to consider other than what to do with interest rates? And according to Janet Yellen, they're not even thinking about that yet. Who knows when they're going to start to think about raising interest rates, let alone actually raise them?
Well, let me ask you this. Based on the Fed not raising rates, do you worry about inflation over time? And if inflation isn't your biggest worry, what other concerns do you have about the Fed not beginning to think about raising rates in a serious manner?
Well, of course, inflation is a concern because inflation is the Federal Reserve's answer to our problems. They are deliberately creating inflation because they think it's a good thing. They are nurturing inflation because they think inflation is necessary to grow the economy. Although they probably don't believe that. They're just saying that because they're also saying that lower oil prices, lower gas prices are going to help the economy and help the consumer. But at the same time, they're saying we need higher prices to help the consumer and help the economy, which means they're just trying to wipe out government debt. They're trying to help the government repudiate its debt, which they won't do honestly. So they're going to wipe it out through inflation.
Gentlemen, there's always a political component to this, to be sure. And Ford, since politics is your occupation as a Republican consultant there in Washington, want to take a listen to what Senator Richard Shelby said during yesterday's hearings.
Many question whether the Fed can rein in inflation and avoid a destabilizing asset prices when the time comes to unwind its massive $4.5 million trillion balance sheet. The Federal Open Market Committee continues to report that it can be patient in keeping the federal funds rate near zero. Too much delay could lead to a more painful correction down the road.
Ford, in your mind, is Senator Shelby offering the right kind of warning to both the Fed and the American people?
Well, he's offering the right kind of warning. It's the biggest concern really among Republicans about making sure that the economy stays strong. The concern again is, are we going to be paying Peter to pay Paul, and what's going to happen down the road? And is this really all smoke and mirrors in terms of the economy? And are we really actually growing?
Yeah, the problem is the economy can't stay strong because it's not strong. It's a bubble. And the Fed is inflating the bubble, which is why it's lying about shrinking its balance sheet. That's never going to happen. The balance sheet is going to get bigger and bigger and bigger when the Fed launches QE4. They cannot shrink this balance sheet. They cannot raise interest rates without pricking the bubble. That's what they should do. But unfortunately, that's not what they're going to do.
Well, there is something else, Peter and Ford, that Americans have almost daily contact with, and it becomes their leading economic indicator, and that is the price they're paying at the pump. Now, over the past few months, we saw a substantial drop in gasoline prices, but now the prices are going up again. Peter, what do you believe is behind the latest increase in petroleum prices?
Well, remember, they dropped substantially, so they're going to bounce somewhat because of the magnitude of the decline. But I do believe that the main driver behind the drop in oil prices was technical. It had to do with the strong dollar. It had to do with the anticipation of a tighter Fed. I think this anticipation is wrong. I don't think the Fed's going to raise rates. And when the market gets its arms around that, I think the dollar is going to turn, and I think the price of oil is going to go a lot higher. And the benefit that Americans had from a lower oil price is going to be taken away. But I think the interesting thing is that a lot of people expected Americans to spend this windfall. They're not going to spend it because they were borrowing money to buy the gasoline in the first place because they have low-paying jobs or no jobs at all, and their cost of living is going up. So we didn't get the normal benefit that we would have from a reduction in oil prices because that's how broke the average American is.
Peter, the Democrats love to say because oil's hanging around $50, this is a great reason not to build the Keystone Pipeline because we don't need it. Prices are going to stay this low. Is that the right way to look at it in terms of energy security going forward?
No, they're not going to stay this low at all. I mean, they're going to go a lot higher. The question is, how long are they going to be at this low level, and how complacent will we become? Because the longer prices stay low, unfortunately, the higher they might rise because people begin to change their habits based on the expectation that prices will stay low. So we get less production, we get more demand, and ultimately we sow the seeds of much, much higher prices.
And mindful of that, is there's another component we haven't really figured into this equation yet on pricing, Peter, and that is specifically with summer and the vacation season. Might that be a time where, what do you think will happen to prices with vacation season this summer?
Well, I think it's the dollar that's going to be more important as to the price of gas. Certainly during the summer, more Americans will be driving, and certainly the cost of flying is going up. I mean, airfares haven't come down as a result of cheaper jet fuel. They keep going up. So I think more Americans will end up driving to the extent that they take a vacation rather than flying. And so that, could put some upward pressure. But the real pressure is going to come from the exchange rates. And if the dollar turns around by then we could see oil prices certainly $60, $70 a barrel by the summer, which would put pump prices quite a bit higher than they are now.
Peter Schiff, as always, sir, we appreciate your perspective on the economy and the mysteries of the Fed and what they may be up to. But I still think a whole lot of Americans are, pardon the pun, fed up. As always, Peter, we do appreciate your time. Ford O'Connell, hang right in there. In the old days, if you were watching wrestling, when two good guys got together, they called it a scientific match. Well, a scientific discussion with the ultimate oxymoron, political science. Michael Patrick Flanagan and Ford to talk about it next.